Nvidia moving lower today, coming off of the highs of Thursday's big market rally. The AI giant has seen a couple months of some rocky trading, but is still up nearly, 200% this year, and is one of the most heavily weighted stocks in the S&P 500 index, as the hype and the spending on AI remains strong. Still, retail investors should not jump right in and invest in a company without knowing the basics. Yahoo Finance explains the key words that you need to know to become a well-informed artificial intelligence investor.
See that? That's Nvidia's stock rally over the past year. The tech firm builds the chips that are powering AI, selling them to the likes of Apple, Amazon, Microsoft. The list goes on. Nvidia alone has driven a third of the market's rally in 2024. That's indicative of how much AI, which relies on chips, is fueling market gains. Some investors see this concentration in just a few names, including the outlier Nvidia, as risky. To gain an edge, investors could seek other AI investment opportunities, but that requires an understanding of the language of AI. Here are the keywords you need to watch out for on company earnings calls to become a smart AI investor. 1. Inference. Inference is AI's moment of truth.
So whenever you're talking to ChatGPT and it's generating information for you, or drawing a picture for you, or recognizing something and then drawing something for you, that generation is a brand new inferencing technology. Is really, really complicated and requires a lot of performance.
Inference is the moment something like ChatGPT infers an answer to a prompt based on the training and learning it's already undergone. It's impressive and expensive. The inference quality of an AI system depends on the tech stack that's powering it, including powerful chips. That power is measured in many ways, including number 2, compute. Compute power is what drives the success of an AI system, like the horsepower behind a car. The more powerful the compute, the better and faster the inferencing. Processing power, memory, and storage all fuel compute power. And you'll hear chip executives talk about the increased compute power for new chip releases. The degree of the increase in that power with each chip generation could allow companies to charge increasingly more for updated chips. And that pricing power typically bodes well for future profit margins. Number 3, GPUs, or graphics processing units. These are advanced and expensive chips that AI models require. They're powerful enough to speed up the computations that are required by AI. Nvidia owns over 80% of the GPU market, mentioning the term 19 times in their Q1 2024 earnings presentation. The chip giant began to work on GPUs in the 90s with the mission to create graphics cards that could empower 3D visuals for video games. Now, that same technology is applied to help large language models like ChatGPT deliver the answer to a prompt more quickly. Nvidia's GPUs have increased AI inference performance by 1,000 times over the last decade. And that level of performance makes Nvidia a tough company to compete with. But other big tech firms are also pouring money into AI, and those firms are known as hyperscalers. This refers to big tech firms that have the power to exponentially scale the use of AI. Companies like Microsoft, Alphabet, Meta, Amazon have all teased products and services that incorporate the use of AI, from Microsoft's Copilot to Alphabet's Gemini to Meta's Llama. These big tech firms are both consumers of AI chips and competitors to the biggest chip makers. With many companies still in the early innings of their AI adoption, keeping an ear out for these terms on earnings calls is going to be an important part of keeping up to speed with where AI is actually being put to work.